Finally, some relief for renters as house auctions stay solid. Earnings season wraps up this week with corporate Australia getting a pass mark, but not much better. And global office sharing group WeWork teeters on the brink of collapse. Welcome to Fear and Greed Business News, Australia's best business podcast. It is Monday, the 28th of August, 2023. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, after the show, speaking of earnings season, you're speaking with Steve Daglian from CommSec.
I am. We talk about the earnings season, what Steve likes, what he doesn't like so much in terms of specific stocks and how they've performed this earnings season. If you're interested in investing, and I reckon a lot of our listeners are interested in investing, well, you got to listen to Steve from CommSec because he has some good oil on what's going on.
Oh, good oil. Great phrase. That is fantastic. What a way to start the show, Sean. It's going to grease the wheels of this program very nicely.
Good. I like it. Yeah. Let's get those ball bearings running. Let's go.
Okay, let's get into it. The main story this morning, it was a solid but not spectacular weekend for auction sales. The preliminary clearance rate across the capital cities holding above 70%. But Sean, there's some good news for renters at last.
Yes, we'll get to that in a moment. Starting with the auction rates, the number of houses under the hammer hit a 7-month high over the weekend, so things are getting busier. But after 3 weeks of creeping higher, the preliminary clearance rate fell 2 percentage points to 72% over the weekend across the 5 capital cities. According to CoreLogic, Melbourne's clearance rate was 69.9%, Sydney was 74.6%, Adelaide was at 88%, and Brisbane was just under 71%. Better throw Canberra in there too. That was just under 55%. Michael, the steam has come out of the market somewhat, but it's still going okay. Now, this week we find out how much house prices moved during August, and analysts expect another decent rise. So, we still haven't had the full impact of interest rates yet, but notwithstanding that, the housing market is doing okay. That's if you own one.
Yeah, well, house rents, Sean, fell in 20% of suburbs nationwide, with stretched affordability pushing renters into seeking cheaper options like apartments.
That's right. Rental values for houses fell in nearly 1 out of 5 Sydney suburbs over the 3 months to July, while unit rents dropped in 7% of suburbs. Hobart and Canberra recorded the largest portion of suburbs where house and unit rents declined at 92%. In Hobart, incredible, and 87% respectively. That's sparked by falling demand and a big increase in rental supply in the past year, according to CoreLogic, which was reported in the Financial Review. Basically, many renters seeking houses have opted out of that market and they're looking for apartments because they're cheaper. Across the combined capital cities, 15% of all suburbs posted a drop in quarterly rent, smaller than the combined regionals where house rents declined 29%. Tim Lawless from CoreLogic warned, though, that there's still a shortage of rental supply that could limit declines in coming months. But at least today, Monday the 28th of August, finally there's some good news for renters.
Yeah, that's a good way to start the show. Sean, how did local markets perform on Friday?
Well, the S&P ASX 200 closed down nearly 1% to 7,115 points, meaning for the week the bourse was off about 0.5%. Plenty of red ink on Friday, Michael. National Australia Bank was down 1.7%. BHP, Commonwealth Bank, Woodside and Transurban finished more than 1% lower. WiseTech Global had a roller coaster ride last week. It reported results on Wednesday morning, then tumbled 20%. Recovered some of that, about a third of that, on Thursday and fell another 5% on Friday. Among the best performers late last week were Woolies and Goodman Group. The biggest movers among the top 200 on Friday, they were Pilbara Minerals, which reported results, and Tabcorp both fell more than 7%. On the other side of the coin, Iress jumped more than 9%.
Sean, as we mentioned earlier, earnings season wraps up this week. How do you think corporate Australia has performed?
Well, about 85% of companies have reported, with almost all the big ones providing their numbers. A few exceptions. Fortescue Metals reports today, Star Entertainment tomorrow. Mind you, you can't call Star Entertainment a big company anymore. It's shrunk so much. Harvey Norman's out on Thursday. But essentially, ahead of earnings season, expectations weren't high, and results have actually been better than feared. But guidance around coming earnings has been, at best, cautious. A little more than a third of companies have done better than expected, and about the same proportion worse than expected. According to Shane Oliver from AMP, the key themes include cost pressures. They remain a challenge, although there are some signs that they're easing. Building material companies are still benefiting from strong activity, though signs of a slowdown there. Insurers are seeing margin improvement, but of course that's at the expense of customers with big premium increases. So far, home borrowers are keeping up their payments. Good news there. Corporate outlooks have been cautious, more negative than positive guidance, and retailers in particular are warning of tougher conditions and better off customers turning to discount stores for bargains.
Yeah, and definitely worth sticking around for Steve Daglian from ComSec as he goes through his winners and losers from reporting season. It's coming up a bit later on. International markets, what's going on, Sean?
Well, last week ended up being okay for global equity markets. After 3 weeks of falls, most of them rose last week, helped by softer economic data, easing concerns about higher for longer central bank interest rates. The strong support for artificial intelligence and specifically NVIDIA on Wall Street also helped global markets. For the week, US shares rose 0.8%, Eurozone and Japanese shares gained 0.6%. However, worries about the Chinese growth outlook continued to weigh on the Chinese share market. It fell 2%. Oil prices also fell last week, but metal and iron ore prices rose. The Aussie dollar was little changed and starts this week worth just over 64 US cents.
All right, we'll be back in a moment with the rest of the day's business news. Sean, 3 US Marines have been killed and 20 others injured, including 5 in a serious condition after a United States military aircraft crashed off the Northern Territory coast during a training exercise.
Emergency services were called to respond to the incident involving a Boeing MV-22B Osprey aircraft on Melville Island shortly before 10 a.m. yesterday. It crashed during a routine training exercise. Australian personnel are not believed to be involved. Prime Minister Anthony Albanese said the crashing of the aircraft was tragic and a regrettable incident. About 150 US Marines are stationed in Darwin and taking part in military drills alongside personnel from Australia and the Philippines.
Now, Sean, the debate around tax reform continued over the weekend, with Treasurer Jim Chalmers saying the upcoming Stage 3 tax cuts were an example of the government acting to take pressure off young wage earners.
He may live to regret that comment, given the government will come under pressure to actually scrap the tax reductions, which are due to come into force in the middle of next year. Chalmers was responding to comments made late last week by former head of Treasury Ken Henry. Henry said an intergenerational tragedy lies ahead if the government continues to rely on personal income tax as the principal growth tax. Henry said it will damage economic performance and younger Australians will get hit hardest. Now, independent MP Allegra Spender, she weighed into the debate yesterday. She said more needs to be done to address structural disadvantages for the young. Away from tax reform, Chalmers yesterday reiterated the impact of a slowing Chinese economy, but said Australia isn't heading for a recession. We'll get some sort of indication of whether or not he's right this week with the release of building approval and retail sales figures.
Now, Sean, the big profit result on Friday was Wesfarmers. It posted an 18% jump in full-year sales to $43.6 billion, thanks to strong performances from Bunnings and Kmart Group.
Yes, net profit was up 5% to $2.5 billion for the full year, ending 30 June, and the result was enough to send the group's share price up nearly 3%. That was on a day when most other stocks fell. It was a result that pretty much demonstrated the benefits of being one of the few remaining conglomerates in the country with businesses across retail, health, and chemicals, energy and fertilisers. CEO Rob Scott said shoppers are still pursuing smaller scale DIY home improvement projects, but they're more cautious about making big ticket purchases that help push Bunnings sales higher. Kmart Group, which also includes Target, the discount chain, it posted a 17% jump in sales. And then Wesfarmers Chemicals, Energy and Fertilisers business posted a 9% rise in sales.
We mentioned this one at the top of the show. WeWork, the shared office space business, told investors over the weekend that there is substantial doubt over its ability to continue as a going concern.
That is not a good sign when a company
Not when the company itself is admitting this, that we don't know whether we can go on.
Yeah, it's losing cash and memberships are being cancelled, and it's brought in restructuring advisors in an effort to stay afloat. The group said demand for WeWork desks, particularly in North America, has been hit by the increasing amount of sublease space available. a slower return to office, competition from other hub operators, higher interest rates and inflation, and interestingly, a lack of funding around the place for startups. Now, startups typically take up WeWork desks, but there's just not as many startups around. This could well have a flow-on effect in the local office market, with WeWork renting space in buildings owned by GPT Group, Lendlease and Dexus. WeWork in Australia has about 18 facilities across the country.
Isn't it interesting, Sean? We've done a lot of interviews and a lot of work with restructuring companies that kind of specialize in this kind of thing. And they all say the advice is that, look, when you need help, just kind of put your hand up early rather than kind of letting it get too late. It's just so fascinating to see it happen so publicly and so high profile, isn't it?
Yeah, I mean, you understand why the CEO of something where like WeWork doesn't want to put his hand up saying, hey, we're in trouble, we need restructuring advisors to come in, because everyone's going to leave WeWork now. I mean, who's going to sign up with a new lease?
Yeah.
So it's very difficult for management in this situation.
Oh, it certainly is. It's an extraordinary story. Now, in international news, the Jackson Hole Symposium was held late last week and into the weekend. It's just a very questionable name, isn't it?
Well, it's like the Coachella for central bankers, Michael.
Oh, no, really?
Yeah. I don't know whether they listen to music, but I'm sure they would to some extent. Totally.
Yeah.
Everyone was there, you know, the heads of like the Bank of Japan and the Fed and ECB, and it's a great time. Federal Reserve Chair Jerome Powell was there, definitely. ECB President Christine Lagarde, both of them spoke and retained their tightening bias on interest rates. They said inflation remains too high. These are the two most important central bankers in the world. Still worried about inflation. They said whether or not rates rise further will very much depend on data in coming months. The general view is the Fed is on hold for the time being. When it comes to the ECB, it's probably on hold next meeting, but people think they started later. The ECB started later, so people still think rates in Europe will go up. The European economy is nowhere near as strong as the US or Australian economy, for that matter.
Sean, our weekend edition of Fear and Greed, it's well worth a listen if you haven't listened to this before. The Fear and Greed weekend edition is a competitive environment where we are kind of competing to decide the biggest story of the week and the sleeper story, and our favorite story is one category where that one really gets quite, I was going to say aggressive, but I mean it's just competitive, isn't it?
It is very competitive, and it's an interesting one. We won't say who won the weekend edition, but it was very, very close, and someone got a strong lead and then the other person caught up, and right at the end, it was just a point or two in it.
Yes. Well, and your favourite story for the weekend edition was all about Donald Trump's mugshot.
Oh, is that where we were leading? I'm sorry. Yes, that is very true.
This is then a segue into the next story, really, because the former US president raised $7 million in just a couple of days after he released that mugshot following his arrest in Georgia on Thursday last week. Isn't that extraordinary?
Incredible. I mean, ridiculous. According to Bloomberg, Trump brought in more than $4 million just on Friday alone, which is the highest single-day haul of his 2024 presidential campaign effort. His campaign has taken in nearly $20 million in the last 3 weeks. Now, of course, that 3 weeks includes 2 indictments, one in Washington and one in Georgia, the one last Thursday. Fundraising accelerated after he returned to X on Thursday. That's, of course, the social media platform formerly known as Twitter, which kicked him off. Elon Musk, the new owner, let him back on. He reappeared late last week, posted his mugshot, linked a fundraising landing page, and off he goes.
That is amazing. This next story is amazing as well. In a bad way, really. France has too much wine, Sean, and it's about to destroy enough wine to fill more than 100 Olympic-sized swimming pools. Did I just see you shudder?
Yeah, I did shudder. And a little self-interest here, Michael. French wine.
It's about to be where you're heading, isn't it?
That's right. I'm hoping that I could perhaps pick up some really cheap. Well, the whole idea is that you can't pick up cheap French wine. That's kind of the theory behind this story. So people are drinking less wine, and it's getting more expensive to make. So to keep the economics of winemaking attractive, the French government, in fact, the European government and the French government, are paying winemakers to destroy their plonk. According to a report in the Washington Post, producers have a huge surplus, which they can't sell at a profitable price. So some of France's most famous wine-producing regions are being hit, including Bordeaux. In June, the European Union gave France about $172 million to destroy nearly 302 million litres of wine. Sorry. and the French government announced additional funds late last week. Producers will use the funds to distill their wine into pure alcohol to be used for other products, such as cleaning supplies or perfume. Can you imagine a Bordeaux red ending up as a cleaning supply?
It's extraordinary, isn't it? So look,
it's a tragedy.
Ahead of your visit, basically, to Europe and to France later, actually in the week, an appeal to French winemakers that before you destroy that Olympic-sized swimming pool of wine, let Sean Aylmer just swim around in it for a little bit. Yeah,
that's right.
Now, one last one, Sean. This story, God, we're on a really good run here. How about this? Pokemon Go was an augmented reality game on your phone, and it made billions of dollars getting people to roam the streets. Now the company behind that game phenomenon is trying to get people to go to bed.
So Pokemon Sleep records and rewards your sleep with Pokemon that you'd otherwise have to spend many waking hours catching. Pokemon Sleep was the most downloaded game during the middle of last month, and over the weekend, it celebrated hitting 10 million downloads. Users play by sleeping with their smartphones close to their heads, and the game keeps track of vibrations caught by the phone's sensors to estimate sleep quality, according to a report in Bloomberg. The better your sleep metrics, the more creatures you collect. There's been a rush of these sorts of games around healthier sleep, but apparently interest is starting to wane, Michael. And do you know why?
Why?
It's because the outcomes of the games are determined by a player being asleep.
Isn't it just this? It's just this trend to gamify everything, isn't it? Now, even sleep is being turned into a game.
Do you remember that TV show many years ago, Big Brother?
Yeah.
And you'd go out and you'd get home late at night and turn the TV on. And it was Channel 10. They had Big Brother on. And it was a camera watching people sleep.
Yeah, yeah. And the other thing, if you're watching that one late at night, you would often be seeing Big Brother Uncut. Do you remember that? That was the
yes.
That was the slightly more kind of risque element of the show.
Yeah. Well, Pokemon Sleep, basically measuring how much you sleep. There's not a lot of excitement in that, I've got to say.
No, but hey, look, it worked for them last time. They made billions out of that game. So
they did.
You never know. They might be onto something, Sean. I don't know whether I'll be downloading it anytime soon. Now, up next is the Fear and Greed Daily interview. You are speaking with Steve Dagley, an analyst from CommSec.
All about the earnings season coming to an end this week. Well worth a listen. Steve tells us what was good and what was bad and what was in between.
Yeah, it's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Also worth a listen. I've mentioned the weekend edition already, but check out Fear and Greed the week ahead with our resident economist, Stephen Koukoulas. It is a big week, Sean.
Sure is. Very big week. As I mentioned, we've got retail sales and building approval figures. We also have Michelle Bullock talking about the environment. Now, Michelle Bullock is the incoming Reserve Bank governor, so it'll be very, very interesting to see her take on the environment and what it means for the economy. I think that'll be a highlight. There's house prices for August coming out. Plenty going on.
Yeah, there's plenty of good listening with Fear and Greed. Thank you very much, Sean.
Thank you, Michael.
It's Monday, the 28th of August, 2023. Make sure you're following the podcast and join us online on LinkedIn, Instagram, X, and Facebook. I'm Michael Thompson, and that was Fear and Greed Business News. Have a great day.